Hello there. When it comes to buying out a business partner, one of the biggest challenges you may face is how to finance the transaction. Whether you're acquiring your partner's stake in the company due to retirement, a change in business goals, or a desire to move on to new ventures, you need to have a solid financial plan in place to make the transition as smooth as possible. The thought of financing a buyout of a business partner is daunting for many, especially when you consider the amount of money it needs. There's many issues we see people face when trying to finance a buyout, don't we, Jack? What suggestions do you have for how we can avoid the pitfalls?
Thanks, Ian. Yeah, so it's, as you say, there are many challenges around this area. The key one really being how you finance that transaction, so how you actually find the money to buy the shareholders out. The first and most obvious solution is to fund that personally, so whether that be from funds you've generated in previous business ventures or funds you've held personally. And that can work, but often we find that as businesses grow in value, the value of the shares becomes too much to fund that personally. So the other shareholders or the management team, whoever's buying these shares, might not necessarily have the funds available to purchase the shares personally. So then they can then look at financing that, so either from loans from family or bank financing. But again, you've just got that consideration of the additional cost and risk associated with that. So you are taking on debt, and that may have an impact on your ability to borrow for your personal needs and the interest cost alone. And I suppose with those options, really, you are using your after-tax money. So your personal funds are after tax, you've paid tax on those. So it's not necessarily the most tax-efficient option anyway.
Another question we frequently get is, can I use company money to buy out a shareholder?
Yeah, so it is an option to use company money to purchase your shares, to fund the share purchase. But you've just got to make sure you take good advice on it, get it done correctly, and to make sure it's effective and tax-efficient.
Following on from that, what would be the potential problems of using company money for a buyout?
Yes, there's a number of different routes, but often they have challenges in relation to both the tax perspective and the cash flow perspective. So a lot of these options are not flexible in the way that you can fund it. So the cash might have to be paid out all on day one, which doesn't necessarily work for a lot of companies, especially when you get to larger amounts, larger values. And the other key aspect is in relation to stamp duty. So many aren't really aware of the stamp duty implications of this, and it can have quite a significant impact on the amount of tax you pay.
That's good. That's not as an effective solution as we would like, is it? We have quite a few solutions we create for our clients, but there must be a better way that works for everyone. Is there a better way of funding a shareholder buyout than the traditional methods that we discussed?
Yeah, so we've recently developed a holding company buyout solution, which really delivers on 4 key objectives. So funds come from the company, so it doesn't come from your personal funds, and it's funded by the company's profits. You've got the ability to stage the payments, so you're not required to pay it all up front at the point of sale. Obviously helps the business with cash flow, means that they can fund it from future profits that they're expecting to make. We can also ensure that the recipient who gets the money for their shares, they are protected from an inheritance tax perspective, which they wouldn't ordinarily be. And there's ways to mitigate and, in some circumstances, even eliminate the stamp duty liability as well.
So we've got quite a number of clients that are using this, and they've proved it's very beneficial and it's working well for them.
Yeah, correct, yeah.
It's always important to get quality professional advice to ensure that a buyout structure is set up correctly and that all tax implications are considered. To learn more about how this innovative and practical solution can work for your business, contact us to book a free consultation today. Thank you.